And the end of that music and those legal words means we are ready to kick off the week on a Monday edition of the Halftime Report. Mondays mean heavy sector analysis, Geno gems at the end. In the news today, Nvidia deciding to do their best Apple impersonation from 2019 and pre-release some earnings. A few other earnings report. We got CPI report this week, and Matt, and we got a monthly precision slap down on the S&P 500. Listen, the one place I don't think you'll see this in another news feed, YouTube feed in the entire world today. But for me, it's all I can look at, that precision slap down of the monthly nine. But we'll get to that in technicals here in a second. Matt, how was your weekend? How you ready to start this week out?
Weekend was absolutely fantastic. I'm excited to we beat the coaches. Dina, there you go. Excited to be here with the crew here at hashtag Team Tackle, everybody, to break down a lot of activity in the market following a nice weekend. But as for pleasantries, Chucky, it was a fantastic weekend. I'm excited to be here for the halftime report and looking forward to tracking this potential breakout. Got a high base, struggling at resistance a little bit, and yeah, Mark, that monthly nine, we're gonna talk a little.
We're gonna talk about it here in a second.
We're gonna talk a little bit, just a little bit, but lots to cover today.
I've obsessed about it. I've written about literally between my Cash Flow Vikings, the Hard 14 Mastermind Group, and even in the Commodity Report, I think I've written about 9,000 words on the subject in the last 2 weeks. So I've been waiting for this moment and to see the patterns that develop thereafter. But Geno, how's the left coast doing? You are the representative of the entire left coast. How is it doing this morning?
Left coast is doing fine, Mark. Enjoying the summer, getting through earnings season, back for another week. This is one more big week of earnings, then we taper off. So this is going to be a fun week.
And I'm looking forward to your Geno Gem and you and Matt breaking down sector analysis here in the coming minutes. But Matt, let's talk about the technicals. It's been ever since you had that intraday breakdown back in mid-July, where you broke down and then you snap back up. It was a changing characteristic of the market, and the market has just rallied for the last month. Very strong rally. But we're at a key inflection point. Break it down for us right now.
Yeah, a strong rally, but not a V-shaped rally. And I think that's very important technically. When you're seeing that V-shaped rally, it can oftentimes leave a lot of people behind as it just gets well above certain resistance parameters. It gets above certain technical parameters. It kind of leaves people behind to a certain extent. You've had some really good price action, and Mark, you're absolutely right. When you talk about this from a technical perspective, yeah, you got to talk about the changing condition from a technical perspective as we were coming into earnings and as we went through earnings, and we'll talk about earnings in general here today as we now have 87% of companies reporting earnings. You see that general increase in support right there. You tested down that level, came right back, snapped up, nice little hammer / Morningstar doji type candle. And then you're off to the races throughout the rest of earnings season with some pretty consistent price action, breakout consolidation. It really does test those resistance levels and support levels. And so you do have some consistency in technical analysis for the first time on the bull side than you've had in quite some time. Now, what you're looking at right now from a technical perspective, we'll jump into some of the news here in just a moment, but let's stay on the chart very quickly. When you are looking at this from a technical perspective, you are looking at this as a short-term bullish uptrend against the backdrop of now an intermediate neutral trend with a primary trend that still shows weakness to it. And the weakness is that 9 EMA on that monthly chart. And so you got mixed time frames here. You got mixed. You got a short-term trend bullish. You got an intermediate trend neutral, and you got a primary trend that is still punching down a little bit. That can get resolved very, very quickly, though. And one of the reasons why this week is so important is we're now coming into we're not in the back half of earnings. We're pretty much done with earnings. 87% of companies have reported earnings so far. Of that 87%, almost every name that you know not named Disney has probably already reported. Disney does report this week. Berkshire reported over the weekend. Barrick Gold reported here this morning as well. And so you got 87% of companies that have reported earnings. And with that said, before I get into just kind of the detailed technical setup, because I do think, yes, we have some economic reports to talk about today and to get ready for this week. But in reality, I think we're all kind of looking at this resistance level, 4,200, 4188 is the monthly 9, but we're all trying to understand the breakout potential of this resistance level right here at about that 4,200 zone right there. When you come out to a little bit of a multiple time frame perspective, you look at the weekly chart now. It's in that pocket between the 20 and the 50, still looking really good on the weekly chart. But you come out to the monthly chart, Mark, and you talk about that big picture, right? When we talk about the big picture, weekly charts, monthly charts, the monthly chart is that macro perspective, right? And Mark, you put out the hard 14 as we were coming into July 4th this year. And in the hard 14, you put a lot of emphasis on understanding the multiple time frames of moving averages. And one of those eye-popping ones that does not play a role often because of just the time frame it takes to create
You're just
monthly
never in the
candles.
spot, right?
You're just never in that area, right? But that's not the case right now. You are absolutely in this moment of time where the recovery can perhaps have some legs here if we reclaim that monthly 9 and we see a little bit of upward movement in price. And if you don't think the monthly 9 has anything to say in this, it does. Even on a day like today, when you're talking about the market here today, just a little bit of a doji candle, but you see that test up here earlier today? When you come down into the intraday, you actually had a pretty powerful open to the cash open. The market was kind of trending up going into the cash open, coming from the overnight activity, had a little bit of increasing volatility before the cash open. Here's the cash open right here, strong upward movement in price, then just anchors to 4188 for over an hour period. And so you just anchored there at 4188, and you're like, what is 4188? I mean, Lord Almighty, 4188 is just a random weird number for the market to, after a strong cash open, you come here to the 5-minute chart, you see that, look at that cash open, boom, 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 boom. Oh, 4188, nope, 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 we're going back down. What is that 4188 number? Well, Mark, you come out to the monthly 9 here, and the monthly 9 is legitimately 4188. And so you do have to concern yourself a little bit with this breakout of 4188 by 4200. I think if you reclaim 4200, you got to be calling that a breakout. So I think we're all looking at this as a high base. I think we're all looking at the breakout channel of 4180 by 4200, looking for that to reclaim that old pivot point there. And if you do break out of this 4188 by 4200 level, it opens up a little bit. It does. You got some longer term moving averages that are a little bit concerned, but they're kind of all right there in a little bit of a cluster. You start opening up a little bit to see that next leg up. Now, I don't think you can expect a massive leg up on a breakout here. I don't think it's one of those situations where it's like, ooh, heavens and the earth are aligning here. Let's go. But you do open up just a little bit up into that 200-day moving average, which is about 130 points up, which is more than enough points for any swing trader that's looking at some bullish breakouts, bullish retracements, bullish flag-based patterns coming into this week. And so I think it's one of those moments in time where we're all looking at those watch lists and we're all looking at bullish trades right now. We're saying, okay, what do we need to see to really kind of pick up the confidence here? I think we need to see a breakout here. I think we absolutely need to see a breakout, because if we break out, we're breaking out on the daily time frame. We're reclaiming that 4200 zone that was a previous resistance level. We're breaking out on that monthly 9, and so and you're already in a pocket on the weekly from the week on that weekly chart from the 20 to the 50, and so it does open up a little bit upon a breakout there, Mark. And when we're talking about the overall backdrop that is causing a little bit of this upward movement in price, you can't talk about the last 3 weeks in price action without talking about earnings season here. Yeah, we've had strong labor numbers in that environment. We've had the central bank also announce monetary policy. Labor market numbers were ridiculously strong coming in last Friday. Participation rate did fall, but the labor market number overall, over 500,000 new jobs coming into the labor market. Wage growth was really, really strong. And so there wasn't a lot of negatives from an economic perspective on that labor market numbers other than the, oh, well, wage growth is going to impact inflation. Inflation is going to impact the central bank. But I mean, Mark, wouldn't we rather have a strong labor market, like in general? I mean,
in general, yes.
In general, wouldn't we rather have strong labor market? And so economically, I mean, you got to look at the labor market numbers saying, okay, that's a very positive sign especially after we did contract 2 consecutive quarters from a GDP. It's more evidence of a shallow recession versus anything a little bit deeper. And so there was other news stories in the last 3 weeks, but I don't think the market, especially from a geopolitical perspective, there was a lot of news stories. But the market cannot be told over the last 3 weeks without talking about earnings. And when you're looking at earnings, Mark, there's 2 things that I think, and I'm going to talk a little bit about this more in depth here today because we're kind of coming into the end of earnings season. But when you're looking at the start of earnings season, I talked about 2 things that we really needed to focus on. One was guidance, and the second thing was the blended growth rate. When you're in an environment where quarter to quarter you're dealing with that type of downward movement in price, we're going to be looking at things to paint some type of rosy perspective for any growth opportunity for the market to be able to overcome the concerning economic condition or the ever increasingly concerning geopolitical condition. Whenever you have negatives in the marketplace, you're looking for growth to overcome that. You're looking for the picture to be painted that is a positive perspective for the future. And so when you're looking at those types of things, it's all about blended growth and guidance. And from a blended growth rate perspective, Mark, just from an overall big picture perspective, 75% of companies are now beating the EPS number. If you remember, that number when the financial sector reported was hovering in the low 60s. We fully expected that to get into the 70s, but now it's 75%. I think you got to say the EPS beats has had a really good trend from the financial sector until today. That has been a positive guidance for the marketplace with EPS increasing. Revenue. In terms of revenue beats, you have 70% of revenue beats right now, which is actually above the 5-year average of 69%. And I was actually expecting that to actually be lower than the 5-year average. The market now has 70% of revenue beats, which has been a positive surprise there as well. But when you're going into those 2 numbers, guidance and blended growth, and let's talk about blended growth first. Blended growth started 4 weeks ago when we were kicking off earnings at 4% expectation. Now, once again, if you recall, blended growth is what has been reported in an EPS perspective versus what those expectations are. That number increased to about 4.4%. Then it increased to about 4.7, 4.8%. Last week, it increased to 5.8%. We're kicking right now at about 6.7%. Now, what has impacted that blended growth the most was positive beats on EPS numbers, but specifically, once again, stop me if you've heard this before, expectations coming out of the energy sector and now actual reports coming out of the energy sector, as well as those actual reports out of the healthcare space. But overall, I don't think blended growth got to the point where you can really identify a growth argument, but it has improved. There's no doubt about it. It has improved. Guidance, though, is another kicker that has improved as well. When you're looking at guidance, not a lot of companies provide guidance versus the 500 stocks in the S&P. For example, even in good times, you might have 100 companies provide guidance in the S&P 500. Right now, you have about 70, let me get the actual number right. I think it's like 72, 74, 72 companies. 72 companies have provided guidance so far in the market. 58% of that is negative. Now, when you first hear that number, 72 companies have provided guidance. Of these 72 companies, 58% of them have provided some degree of negative update to the guidance. You would anticipate that as a negative. It's not. It's actually a positive because typically speaking, we have more companies issue negative guidance than positive guidance. And so typically, because we do see more companies issue negative guidance, when you have 58% of the companies issue negative guidance in an earnings season against a backdrop of the 5-year average of 60% and the 10-year average of 68%, that is a positive viewpoint for the marketplace when they're looking at the environment to start this earnings season that is just a little bit more dire than what we have seen over the last 5 to 10 years. And so you've had positive improvements in both forward-looking guidance. You've had positive improvements in blended growth, although both of them probably, I mean, we're splitting hairs a little bit, but I do think the market is seeing them as a positive. I know I'm seeing them as a slight positive moving forward as well. What's that next catalyst, though? What's that next catalyst? Because all of that is kind of building into the price action here. And obviously the market is responding a little bit more bullish coming off some of these numbers than what many expected in the market. But the simple reality, it has led us to all of this potential high base breakout. And I don't think it's going to be earnings that breaks it out this week. This week, you don't have a lot of companies in the S&P reporting earnings. Like I said, you got a couple of utility stocks and you got Disney. You got that big old dog Disney out there reporting. You got Berkshire over the weekend. We'll talk about their earnings release here in just a little bit. You're looking at an economic backdrop this week where you have the CPI report, the PPI report, and consumer confidence. You also have geopolitical situations coming. China's still killing some fish over there in the South Chinese Seas, throwing, launching all those missiles and showing their might a little bit, still throwing a little bit of a temper tantrum over there. So it's certainly, we got to track that as well. But while we're tracking all these major stories, it really doesn't matter. The number one thing we're tracking right now is this high base kissing up against a major breakout potential. And regardless of what the catalyst is this week, we got to be prepared for that, because if this breakout doesn't hold and that 90 EMA on the monthly holds, well, in the back of our head, I don't think this occurs. But in the back of our head, we were here a little bit ago. There's substantial differences in the trend, the pattern, the economic analysis coming into this high base versus the previous high base. But we do have that monthly 9 on top of us right now that certainly can act as an origination point. And if it does act as an origination point, if that support level gives out, which is once again a very, very similar level of support to which we broke last time, we just got to get prepared. More than likely, we dance here a little bit, we get a catalyst, and we see what occurs. But just keep in mind, you got that massive resistance overhead at about 4188 by 4200, and you got a pretty important support level right here at about that 4080 level. So keep an eye on that technically. I think this week we're talking a lot more technicals than we were the previous couple weeks.
Yeah, I think once you get beyond the CPI report, I think you got a month of technical analysis and then people guessing.
Oh.
like it's going to be a lot of technical analysis. Gino,
Mm-hmm.
how are you approaching the market right now?
Man, I couldn't put any icing on that cake that Matt just put out there, man. That's perfect. Thank you for that, Matt, for doing it. I don't know why.
But can you put some sprinkles?
Well, maybe. I mean, I did all this research all weekend. I just should have asked Matt. I've been.
Hey, I just read your newsletter, bro.
Oh, is that what it was? So you believe everything you read, right?
Everything you write, I do.
You only read the stuff in bold, okay?
Mm-hmm.
No, so so thank you for reading the newsletter and repeating it back to me. Great.
So basically, guys, in a nutshell, all I did is basically read you what Gino wrote.
Hey, I appreciate that. I was wondering if you're reading that, Matt, because you did a great job, man.
Every week I read it, brother. Every week.
No, actually, the joke is this. Matt and I sit on Friday for 6 hours and put this together.
It's a while.
So we have to agree on it. We put it together.
I might be the voice, but those are a lot of the coach's thoughts. And
then we run it by Mark to throw a veto in there or not. But also, I just wanted to put some sprinkles, Mark. Yeah, I'll put some sprinkles on that cake. On the CPI, I got a question for you to stir the waters. That's the focus because this is the gauge for inflation, right? And I'm looking at the numbers now and from June. And the main thing is this, like the big jump is again, definitely everybody knows energy. Energy went from 3.9 in May to June 7.5. Mm-hmm. And then of course, motor fuel went from May 4.1 to 11.2. So it was the jump in those two energy products. I'm going to, what's the CPI, the core CPI without energy is what I'm going to look at, because that bleeds down to transportation, and there was a jump in transportation. But as you know, I've noticed it here in California, of course, the gas prices have come down a little bit all across the board. Is that going to factor into the July report yet? I'm not sure. I'm not sure if those numbers have made any difference, because it's a lagging indicator, right?
Yeah.
But I've seen the biggest drop in the last 2 weeks. So, I don't know if they're dissecting it like me, but that's really the heartbeat of inflation, of those energy prices, because people are starting to feel it. People are starting to feel
energy, food, and housing.
Yeah. So,
those things.
But it all starts with the energy, because then that transportation goes up, and then transporting of food to the stores. And
it's also the quick. I don't know what's quicker, energy or gas or food. Both of them are pretty quick on adjustments. Shelter is a little bit more lagging from an inflationary perspective.
Has a lot to do with that. So I want to see, because my prediction is this: if we see this no change, are they going to talk about, well, we should see a drop next month? Are they going to give us an outlook? Because based on oil and energy, that has to change if you look at the averages. Because I'm looking at the averages, that it's really favoring those numbers on energy. Now, the next thing, here's the question to stir the waters.
Yeah.
Let's say, real quick argument on this. Numbers come in, record high inflation since 19 or 1800 of the, since record
40,
high.
4-year high. It's been 40-year high for 7 consecutive months.
Okay, so let's say they're near that number or worse, because it is a lagging indicator. It could be worse. Whatever it is, it's a high inflation. Do they take that as, yes, we need to be more aggressive at raising interest rates? How's the market going to react to that? Because, that's the main thing, what we're looking at here. But also, would they wait? Here's the question. Would they wait till the next meeting, or would they do that raise, since they know they're going to have to raise it, just go ahead and do it before the meeting, inter-meeting raise of interest rates? Would they ever pull that? Because that's never a good sign.
I'll tell you, that's not my read on this version of the central bank. I don't think Jay Powell is very, very, very coordinated in his message and how he wants his message delivered to the marketplaces. You saw it over the last 2 weeks, for example, when the market had the initial take on the central bank from a week and a half ago was they were turning dovish. Well, that wasn't our take. Our take was that was the wrong take. That's not what we heard from Jay Powell. But the market can get hopeful oftentimes. There's no doubt about that. And what Jay Powell do? Jay Powell sent out the army of central bank speakers over the last week and a half. And Mark, I don't know about you, but I've personally heard from about 10 different central bankers, most of them as voters, who basically have thrown cold water on that for a week and a half consecutively, including over the weekend. We're absolutely staring down the barrel at another 0.75 adjustment in 5 weeks from now, and perhaps a 7.5 after that. And so even my take might have been a little bit not as hawkish as I needed to be, quite frankly, based on what the central bank has been talking about.
Now listen, when Neil Karkashi comes out and it sounds like a hawk, that's all you need to know.
The end of the world is here.
So, Mark,
but
based on what you're saying,
my last point on that, though, Gino, very, very, very quickly, is because Jay Powell has been very coordinated over the last since he became the central bank president back in, what was it now? Oh, was it? It's been a while. Was it 2018? Was it the beginning of 2018? Was when it's
end of 2017?
Yeah, so it was beginning of, it's end of 17, early 18. Ever since then, Jay Powell's been, he's wanted to communicate with the marketplace and not do anything too unexpected. And if you remember, even in the early stages of the pandemic, the COVID pandemic, the central bank didn't radicalize and come out with in between meetings and adjustments. They didn't even do it then very much. And so even in times of ultimate economic calamity and crisis, Powell didn't come off the calendar too much. So I don't expect him to do it here. But from your inflationary conversation, though, Gino, I do think there's a reason that the market is expecting a slightly lowered expectation from an inflationary perspective this month. When you're looking at the previous month, CPI was at 1.3%. This month, the forecast is 0.2%. Core also is expected to see a contraction this month as well. You're looking at the PPI report this week as well. Well, last month it was 1.1. It's expected to come in at 0.3 here today. And so I do think we have built into the expectation that the slight lowering of gas prices around the U.S., maybe a slight change in food prices. Remember, in the last month, guys, we've had major big box retailers also announce that they have oversupply and they are discounting all of their supply as well. And so you should see a reduction in inflation in clothing and non-discretionary items at those big box retailers as well. That expectation is kind of built into the market a little bit too. And so when you're looking at this, and if you just hit the graph here, you can kind of see where we were last month, where we were the month before. Right. We are expecting that to come down into this range. And so, yeah, there is an expectation in general in the market that we are expecting a little bit of a reduction in inflation, but again, every report is always based on what the expectation is. Remember, last month was last month. One of the reasons the market is going up is because there is a little bit of a peak inflationary narrative going on, that the central bank will become a little bit more dovish due to that. They'll be able to pivot a little bit more. The earnings, the veracity of earnings price performance 2 days before, 2 days after is more than what we typically see in the market. A lot of that lowered inflationary expectations already built into the marketplace, which means we're not going to be comparing month over month. We're really going to be comparing what the expectation on Wednesday is for CPI on Wednesday, and the price response is going to be based on that expectation. So it's a wonderful point on looking at the reduction of inflation.
We don't have to worry about them raising rates before the SEP 21.
I don't think so.
Yeah, it's a relevant question, because on Friday, for the first time in a while, an intraday chance, it went up slightly, right? Nothing dramatic. But there was a pricing in of just very slightly, some movement there on that. It would be, like, I agree with Matt. It would be shocking because
and the
of
Feds
everything
don't
Matt
like
just said.
to do that because
not since Alan Greenspan.
Right. Well, yeah. Alan Greenspan, man. That I have some baggage because of that, because I was trading those days.
Well,
you got that 1999 baggage.
Oh yeah. So I would literally back like in the late 90s. I would actually have a real easy day during the week when I was running my business. I'd be like, you know what? I'm going to take Tuesday or Wednesday off. Middle of the week, hump day. I'll take Wednesday off, right? And trade that day. I get my trades in, and then the notes would come out. Yeah, we're raising a 0.5 point. No, we're going to lower it a 1/4 point. No, we're going to raise it a 3/4 point.
Yeah. Well, if Bitcoin is at 45,000 and GameStop at 100 3 weeks from now, the odds of an intermeeting hike will go up dramatically. Back on the halftime report, special recorded segment after technical difficulties. So, picking up where we left off. Matt, we don't always record this.
No, we don't.
But, you got to make you got to make, got to make lemonade out of lemons, as they say, which is what Bulls have been doing.
Lemonade.
Which is what Bulls have been doing for the last month. I saw a bear today say, "Screw it, I'm all in." Well, I might have waited till after the CPI report on Wednesday to
or a breakout of 4,200 like we talking about. But I'm all in. I'm all in after the movement. I like that. But okay.
Okay. Where are we at now? Right now?
Yeah, let's talk a little bit about sectors here, as that's where we got cut off in the live recording. And once again, apologize for that hashtag team tackle. We never like to have any technical difficulties, but we did. But we're still going to come through with the recording and post it to YouTube. So hope you enjoyed the recap here on the market here today. Let's talk a little bit about sectors here, Chucky. And Coach Gino does such a wonderful job putting together the Tackle Trading newsletter, which we put all of our rankings in every single week. And we first start with the S&P 500. Obviously, we talked about that during the Skyline, but we did upgrade it by 5 to positive 40, a little bit of a preparatory breakout type ranking for us at Tackle Trading. The reason the upgrade without the price appreciation is we put technical analysis as the number one type of analysis as we put into our rankings. And last week, when you were at the positive 45, a little bit overextended. We got the defensive nature we were asking for in the market last week. You got the high base. The 9 EMA catches up to it. So what really changes isn't necessarily the trend, but the pattern. Last week, you're overextended a little bit. This week, you're not. This week, you got a high base with the 9 EMA catching up. That's why we got the positive increase in the ranking at Tackle Train to that positive 40. Now, when you're looking at at other sectors out there, when you're looking at technology was the first sector of the growth sectors to get into that positive bullish territory, coming in at positive 35. Good price movement, good momentum, very consistent price action here, and doing a little bit more front running than, say, XLC Communications, which did get upgraded as well, more simply because the market got upgraded, though. Communications being carried a little bit by the market, but it's not something to sleep on as we're fighting up against a breakout channel right there in the 58.50 level. Keep an eye on that 58.50 level as a potential breakout. And the one question I think we have on comms, which has been a laggard for over a year now in the market, is can it eventually catch up? Well, the answer is most likely yes. In the short term, we've seen sectors catch up before, both on the bull side, both on the bear side. So the open question on comms is, can we break out and can we catch up to a little bit of the front running status that's happening in technology and in discretionary, which also, like technology, didn't get the upgrade that tech did, still at that positive 40, little bit overextended, a little bit more volatile, a little bit more choppy than technology, but very similar in terms of the rankings. Discretionary coming in at 40 versus what we're looking at technology, a little bit more consistent pattern there, coming in at 35. When you're looking at your cyclical areas of the market, you're talking, the industrials, the finances, the energy products, the basic materials. Let's start with basic materials. Very similar to the conversation on communications versus tech and discretionary. Basic materials has been lagging a little bit of the healthcare space, a little bit of the industrial space, and certainly the energy space, but it's trying to catch up. Was fighting up against that 50-period moving average. Keep an eye on that doji. It's breaking out. It is breaking out officially out of that flag-based pattern. So keep an eye on materials in a little bit of a catch-up scenario as well. When you're looking at finance, a little bit of a high base, falling a double bottom, double top, and it is just riding that 9 EMA. 34 seems like the resistance level to anchor against that resistance level. Industrials outperforming some of its counterparts in the cyclical areas. Nice high base with momentum and trend, trying its best to break out there. Keep an eye on the industrial sector as it is starting to show up on more scan after more scan. And so when you're looking at the entire cyclical landscape, you're seeing an area of the market that is improving outside of energy. But we talked a lot about energy in the Skyline piece, a little bit of neutrality in the energy spot. And with the 50-period moving average holding, that's something that we just need to look at. If energy wants to, you tried to break out of that 50, but you're overextended. You're running from a different level. Keep an eye on that 50-period moving average. A breakout there certainly could see some price appreciation in front of energy. I want to bring in Coach Gino very quickly. Gino, from just the cyclical areas of the market, which one of these sectors kind of stands out to you?
Yeah, man, I'm looking at the industrials. I'm seeing strength coming into transportation, which is a sub-sector, or we call it an industry of industrials. I'm seeing strength coming back into transportation. And so I think that's going to be kind of based on the CPI coming out. That's going to be a sector to watch as far as the cyclicals. I've backed out of a lot of my energy plays because they're too far underneath the 50-day moving average. Still good fundamentally on the energy. A lot of the stocks, great fundamentally, great for investing targets. But as a trader, I'm starting to see strength, moving averages, different technical signals in industrials, and also in the financials. I like the financials. I like how they've bottomed, that W pattern, and they're starting to, that's a nice base in there. Mm-hmm. And with the wake of all the interest rates going up, they're pricing all that in. So yeah, the cyclicals, now looking for the separation. separating out of energy and into a different cyclical is what I'm doing.
I like it. I like it there, Gino. What about the defensive sectors, Gino?
Okay, defensive, on the newsletter, this is why we do it, a visual. We got the gridiron there. It's a tight grouping, meaning they're all ranked really close to each other. All four of those are between 35 and 40 on the positive side of the field. That's like it's straddling the neutral, slightly bullish area. We upgraded all three: staples, real estate, utilities, slightly, but healthcare just didn't budge because honestly, it hasn't gone hardly anywhere, which is interesting because healthcare is the biggest sector of the four market cap wise. It is the mover of those groups, but money's not really going into healthcare. It's going into these other higher dividend paying type companies. And, when you start to put those slightly bullish, utilities and staples are actually rallying. It's a kind of like a fight between right now, and I mentioned in the newsletter, technology, which is the biggest growth sector, versus staples and utilities. It's like, yeah, you don't usually see those three fighting for the lead. It's either one or the other. It's either one of the defensive or one of the growth, because technology moves the market. Utilities doesn't. It doesn't. It would have to be.
Nobody cares when a utility company goes up and down in terms of the market itself.
Yeah, it's not. These aren't market movers.
Yeah,
here's the only one there that moves the market.
Well, think about it. Nvidia comes out and pre-releases earnings today. It has a market impact.
Yes.
Healthcare's had a really, really good earnings season in general, and it really hasn't had an impact.
In fact, Nvidia has a bigger market cap than the entire utilities sector. So,
that's amazing. That is amazing.
So as far as trades and looking for trends, there's stocks in there. They're just not market movers.
Yeah. And I think in general, Gino, I think the market's kind of waiting on this breakout. If the market in the S&P breaks out, I think you're going to see a little bit more separation from growth and defensive. Right now, you're in the rankings. There's like this cluster between 35 and 50, right? Mm-hmm. And it's based on the improving condition, and you're seeing technology lead that improving condition. You're seeing sectors like finance, basic materials, underperform that.
Right.
So you are seeing some sectors that have separated itself and some sectors that have shown some leadership, but for the most part, the entire market is being carried a little bit. And if this is going to continue, and we're going to continue to see separation from those growth areas, it's got to start with the breakout in the S&P 500. And right now, we're just kind of clinging on to that breakout in the S&P specifically. Thank you for your thoughts on the sectors there. Mark, that's about it for sector roundup here today. Let's talk a little bit about the commodity space.
Yeah, let's start with crude oil, right? We broke down from the 200, ugly looking chart. When I'm looking at my crude oil chart, you don't have the 5 EMA on there, but we've had 3 days in a row, Matt, where the 5 EMA has slapped you down to a penny, right? Like you came up to the 5 EMA and slapped down. Those last 3 days, slap down, precision slap downs, but forming some horizontal support here too. Not a pretty chart. Absent a just, and 2022 can produce this. We've seen this, a V-shaped type breakdown and then just blow it out to the top. Not an ugly, not a pretty chart at all. What are you seeing here?
No, what I'm seeing is a bearish downtrend in the short term. Obviously, the backdrop of a longer term bullish uptrend is being questioned to a certain extent, given the fact that you are now underneath that 50-period moving average, which was acting as a little bit of a support. You're underneath that. You're underneath the 200-day moving average on the daily chart, and like you said, when a market, and it doesn't matter what the market is, when a market catches momentum, it's going to ride that hard 14. It's going to ride that 5 and that 9 EMA until we start to see a little bit of overextended situations. And we are seeing a little bit of overextended situations within the crude oil space. You see these pretty large downward movements in price, a pretty substantial large downward movement in price starts to contract a little bit. Well, you went from 100 down to around 87. You're down 13% in that downward movement in price. You're pretty overextended to the downside. And then you start to do a little bit of low base type analysis here. And so I think what we're looking at in crude is really kind of, you bring that into the energy space a little bit and you say, what, energy's in a little bit of a neutral formation. A lot of those stocks underneath this 50-period moving average. Energy has been doing a little bit better than crude oil has. If crude oil comes back up above the 50-period moving average, if crude oil consolidates and can get back up within these ranges, it should be pretty decent for those energy stocks also trying to fight up against some resistance levels and maybe get those back into some degree of bullish territory there. And so I do think you're looking at crude oil as a little bit of a gauge to what we're looking at in the energy space itself. But right now you're looking at a low base situation. It's caught the hard 14, and we need to see some behavioral changes within crude oil before you get confidence from a bull side in the energy space specifically.
Indeed. Gold doing its best to hold. Textbook algo sell-off on Friday with the unemployment report where yields spike and gold sold off. Bouncing here, not bouncing, but holding the moving averages on gold. What are you looking at on gold?
Yeah, on gold here, and Barrick Gold did report earnings here today. We'll talk about that in earnings roundup. Gold here fighting a little bit of a bear stop out here. Deeper retracement, and again, I labeled this a bearish retracement all the way up until this high base. Now you're looking at this as a little bit of a high base scenario. We call it bear stop out because the high base is coming in after a deeper level of retracement, and we call it bear stop out because if it breaks back up above the base, it basically destroys any bearish argument at that point, and we typically will see a little bit of short covering. We'll typically see a little bit of a pop. I'm not sure that it's trade worthy, quite frankly. It's a little bit better for those longer term holdings on gold, obviously, but I don't think it's trade worthy here, and I'm not sure it's a pickup zone for those longer term situations either. So it's more about just, hey, those longer term holdings, we got a nice little bear stop out day. And then as we start finding up perhaps against maybe the 200-day moving average or perhaps against that resistance at 1875, maybe that's a different story from an active trader or, a pickup from a long-term holding perspective. But I'd like to see this high base following that deeper retracement get settled first. And I think what will help settle that is what happens with the US dollar here. US dollar just kind of stuck between that 28.10 and that 28.60 level. You're starting to form a little bit of a pinch against that 20-period moving average in the 50. A little bit of consolidation. I think you can call this short-term consolidation within the dollar, especially on that deeper pullback here. That deeper pullback obviously led to a deeper retracement in the gold market. So I do think if you're looking at gold, you got to be looking at gold and saying, hey, if we break out of 28.60 on the dollar, the gold's going to come right back down. It 100% going to come right back down. If you break this short-term support at 28.10, which also coincides with where that 50-period moving average is, I think you might be seeing a little bit of upward movement in price on gold, especially if the market struggles a little bit at that resistance zone. So definitely keep an eye on the dollar as well as gold. And then when you're looking a little bit down the rest of the commodity space, a little bit of copper here. Copper here showing a little bit of upward movement in price, flag-based pattern, kissing up against the previous resistance at 3.6. Look at that, a little bit of a changing characteristic. Caught the 5 and the 9 all the way down, but that has obviously shifted a little bit. So we're seeing a little bit of upward movement in price and a little bit of buyers coming in, not in droves, but a little buyers coming in at the low prices. And because we had somebody new to the halftime report today, I really wish we could have done this live. But they were asking a little bit about old natty gas here, and natural gas, not something we talk a lot about on the halftime report, but you got to be looking at this as this support level. If it gives, you've lost all your support, and it could be a
Yeah, I
repeat
know.
all the way down to that 200-day moving average in a very short time frame. So keep an eye on that support level. That's a bullish retracement that tried to confirm, that got snapped back, and now you're threatening that support level, that violation, Chucky. I see these things a lot. Deeper
The last
retracements.
couple of weeks in the commodity report, this has felt like a topping pattern for a week. Natural gas is something I have followed for years and years and years. And, once that momentum died out, it has felt like a
Look
topping
at that
pattern.
wickety wick nonsense.
Like on the way up, I'm like, I don't know when the short-term momentum dies, but I've been pretty accurate on this. I'm like,
Six makes some sense here, Chucky.
yeah, I'm like, listen, I don't know when the daily momentum dies, but it's probably going to die near resistance. And then maybe you get another surge up at some point. I don't know.
Yeah.
But this thing has smelt like a topping pattern to me for weeks and weeks now.
Well, and look at that run up there, and then the massive rejection.
And that was just momentum that got out of control.
A massive rejection here. It tried to break out, came back down, lost its momentum. It's lost its edge. And so I do think you need to be a little bit patient here.
If that support level breaks out, and let's because I know
there's just nothing until 6, Chuck.
Well, that's the thing, is if I was the NUNG, the ETF,
the ETF.
Yeah, and you might have been at the start of the year. It's been a good year, right? Like, I don't know how you don't, if support break, consider something, right?
Yeah.
Whether a protective put.
If it's UNG, it's writing a call option.
Yeah, because that you could have some real fast downward momentum there.
Well, and it's natural gas. Look at the support level once it gives here, Chucky. Once that support level gives, there's nothing there. Once that support level gives, there's just nothing really there. I mean, 22.50 kind of stands out a little bit, but $20 makes some sense. So just keep an eye on that floor there. It does coincide very, very nicely on UNG and on /NG there. And then last in the commodity space, typically, Chucky, is old Bitcoin here. And we got another one of those weird wicks there.
What is your computer?
Listen, it's just a gentle reminder. That's all it is. But what you also have, don't worry about that. What you also have here is a little bit of a breakout here, potential here, Chucky.
A breakout and room to run to the upside. You have some room to run.
And probably not a ton of room, right? I mean, when people think about Bitcoin and they buy Bitcoin, they have these dreams of, I'm going to pick it up and it's going to go to 50,000 overnight.
Some reasonable room to run.
Room for run is what you're talking about. A little bit of room to run until you start working up into about 28 to 30,000. And that's about $4,000 or $5,000 on top of the current price. So yeah, it's definitely looks like it wants to break out here, but it has to be breakout. It has to be a breakout situation. You can't play underneath the breakout channel. That's got dinged two consecutive times there at about 24.5, 24.6. So keep an eye on that level. And if it breaks, people that are trading Bitcoin obviously are going to look at this as a bullish breakout. But again, this is not the pocket. That's not the clear air. You got to be looking at this little consolidation.
You got weekly and monthly moving averages, but there is a little bit of space to move up here.
100%.
Which it means Bitcoin, it can happen in a day.
Yes, it can. Yes, it can. But that's all I got for commodities in the news here today.
Well, let's get to stock talk. Let's fire off. I want to start with Barrick Gold. I'm an owner of shares of Barrick Gold. I believe in Barrick Gold. When Barrick Gold was getting killed, I actually bought back a protective put in the last couple. I could care less about the algos and their little trickeries they do with downward momentum. I believe in this company. I think it's cheap valuation. Did the earnings report justify my, hard diamond hand stance?
Well, I mean, if you're looking to pick up a quality gold stock at a very low price, I mean, Barrick Gold, Newmont Mining, they do make some sense here. I mean, we're talking about some pretty low prices on Barrick Gold, and once that level gave there right here, man, just that downward movement in price, you start working down a little bit more. You start getting into about probably 14 before you got this foundation of support, but you got some evidence around 14.5 and 15 as well. And so technically, I think you do have an argument for value. Fundamentally, there is an argument from a value perspective. Does their earnings report, does it do enough to justify adding here? Gold comes in at 24 cents versus the 23 expectation. Revenue missed 2.9 versus 3.1, which is not abnormal for this area of the market. Gold's down on the quarter. Revenues are going to be down in the gold miners a little bit. I'm taking this as a little bit of a positive beat. They don't provide guidance. Revenue was down 1.2% year over year. A little bit of a gapping situation, nothing to be too concerned about. I think you're just looking, you're not looking too different than what you're looking at with GDX here, Mark. A little bit of short-term consolidation, a little bit of a pop-up. What I'd like to see on GDX here is to see some degree of increasing support. You have it a little bit here. Let's see how it works against that 50-day moving average on GDX. But gold doesn't look too dissimilar to what we're seeing in the gold market, in the gold mining community in and of itself. So if you like gold, if you like GDX, you probably like gold here at these price thresholds. It's not too difficult to try to find some value from a fundamental or a technical perspective, but you are fighting some pretty decent downward movements in price. And I think we should wait to see that resolve first.
Okay. What do you got next for us?
Next, let's talk a little bit about Berk, BRK.B here. Old Warren Buffett's behemoth of a company, Berkshire, also had earnings coming through the weekend. They came in with a beat of 420 versus the expectation of 294. Revenue was 76 billion, which was about quite a substantial reduction from where we were a year ago with Berkshire. They did have a $43 billion loss on their equity investments in the quarter. But what was interesting about Barrick is, and not Barrick, but what was interesting about old Berkshire here is they've stopped the aggressive buyback program of Berk itself, BRK/B here. What they have done, though, is they've been fairly aggressive in buying other equities instead. And so they got a pile of cash to put to put into action. I think they're sitting on about $100 billion in cash, and they were rewarding their investors with a little bit more of an aggressive buyback. Now they're rewarding it by saying, you know what, we see a little bit of value here, and they've been adding to long-term holdings to a certain extent, especially in the energy field with Buffett and Oxy. So we did have Buffett a little bit of a beat here. Buffett's company, a little bit of a double bottom, doesn't look too dissimilar to a lot of what we're seeing in the sectors in the broad market itself. Keep an eye on this, a little bit of a bull flag here, but you got the overhead of 300, and then obviously the 200-day moving average at 306. Keep an eye on it. Berkshire is always on a watch list somewhere. Just keep an eye on how it fights against that 200-day moving average. Next, you have Tyson Foods here very quickly. Gap down analysis as they come in at 194 versus 195. Revenue did come in hot at 13.5 versus 13.3. Guidance was a little bit mixed, but we're going to give it a reaffirming guidance, although it's a little bit within the ranges there. A little bit of gap down scenarios. You were fighting up against the 200-day moving average. This is a little bit of a stay away. Too volatile of a candle, trying to fight a major breakdown. We got to see if that candle gets a little bit less volatility, and we need to see it set up, and nothing really to see here on Tyson Foods. Mark, one company that I know is on your radar typically is Palantir. PLTR here comes in at -9 cents versus the 3 cent expectation. That's officially a miss. Revenue did top the expectation, 473 versus 468. But they lowered guidance, and it was a pretty legitimate lowering of guidance here for Palantir. Gap down scenario, but not a gap and runner here. Gap down, sell down scenario did not occur. Gap really kind of held its foundation. You ran up in front of the earnings. You gave up that running up. Let's see how this gap handles that $10 price threshold, Chucky, as $10 certainly does stand out on Palantir. Outside of earnings here, very quickly, you have First Solar, First FSLR. They got upgraded based on the Inflationary Reduction Act getting passed out of the United States Congress, which puts in about $430 billion of fiscal stimulus coming into the market. A lot of that coming in from a clean energy perspective, and solar companies are certainly set to take advantage of that money coming into the market. And you're seeing a little bit of run up, not only in First Solar, but in other solar companies as well. They're certainly on the radar. Mark, you put them on the radar a couple of weeks ago. They're still on the radar there as they are certainly punching up. But I'd like to see this area of the market settle down just a little bit. First Solar certainly did get upgraded, though, on the passaging of that act. And then the last stock in the news here today, Nvidia doesn't report for a few weeks here. And I hope this is not a trend, but we've seen it a couple times this earnings season. Companies that are announcing in 2 to 3 weeks, coming out and pre-releasing a little bit of their news. And typically that is always seen as a net negative. Nvidia lowers guidance pretty aggressively here on both EPS and revenue, and the gap down is related to that lowering of guidance. And again, I hope this is not a trend coming out of the market. Shocking and
just
surprising.
Tactically makes it a mess when you're trying to navigate earnings.
I need to remind these companies publicly, you don't want to upset your traders. You do not want to upset your traders that love trading your stock. You got to treat them like investors because they come in and out of your stock all the time. And they do it because they love your company. It's on their watch list. They do it because they have trust and confidence in the technicals. They do it because they've had success on your company. But when you throw variables like earnings releases that are not planned, not on the radar, not on the calendar, traders get a little uneasy. They lose a little bit of confidence, and they start going
snippy.
to look. They start going to look. They go look at a little bit more of AMD and Micron and other semiconductor companies. So Nvidia, bad decision. It's always going to be a bad decision. Don't release information unless you let the market know it's coming to them.
Indeed.
Especially on earnings. Especially on.
Does that wrap it up for today?
It does. That wraps it up for today. No Gino Jim here today, as we are going to be fixing a little bit of our tech issues here, but just wanted to quickly get a video out there on the sectors and on the stocks in the news here today. We'll be back with more in the halftime report live on YouTube tomorrow, and apologize for our tech issues on the halftime report earlier today.
No, and let's get to some final thoughts. Gino, what are your final thoughts for the team?
Focus is on the CPI and getting through this last week of major earnings, over 1,500 earnings. And yes, watching for the separation of sectors after this. So hang tight to the halftime report, guys.
No, Matt, final thoughts for the team.
Yeah, we got big week in the market this week. Not as big as the last 3.5, 4 weeks in earnings season, but there's a few earnings to cover this week. Disney being the big one. You got the CPI report on Wednesday, PPI on Thursday, and then you obviously have consumer confidence coming on Friday. I'm sure there's Fed speeches out there as well. But this feels like a little bit of a technical and a macro week here. Obviously, we've been talking a little bit about the Chinese-Taiwan situation. The geopolitical situations around the world are a little hotter today than they were a week ago, and they're a little hotter than they were even 3 weeks ago. And so we're seeing increased chatter from a geopolitical perspective, and certainly to keep your eye on here. With earnings season kind of getting put in the rear view mirror, and we're in a little bit of a pocket between central bank announcements. This should be a little bit of a big picture and a technical week as we're finding some major resistance with some very important economic reports that are coming out.
No, indeed. And listen, this is a huge, massive for a moving average geek aficionado end user. I mean, how that monthly 9 navigates is just. Listen, I've studied everyone in the last 40 years, and I get one live to study here, and apply my trading. So we're going to break down all the technical. CPI huge on Wednesday. But if you need anything at all tackle trading, you can always email us at team@tackletrading, and we'd be happy to help. So have a wonderful day, everyone, and we'll get the tech fixed on our end. Have a good day, everyone.